Okay, for this video we're going to cover the Schedule Q for the Form 5471. This schedule is titled CFC Income by CFC Income Groups. So what is this form and why do we need it? Well, firstly, this form is relatively new. It was issued starting with the 2020 tax year, so it's only been around a few years. And generally what this is designed to accomplish is help corporate taxpayers and individual taxpayers that make a 962 election to figure out what their deemed foreign taxes paid are. Now, there are a few other uses for this when a corporate taxpayer is completing their 1118. That's the foreign tax credit worksheet that goes along with the 1120. But for the most part, it's the deemed foreign tax credits paid, which is why they need this schedule. So who needs to file this with the Form 5471? Well, if we go back to our 5471 table, we can see here at the second from the bottom we have separate Schedule Q, and this is required for Cat 4 filers, Cat 5A, and 5B. Now, you remember our sample here, fact pattern, we have John taxpayer. He's a Category 4 and 5A filer, so we have to complete this schedule. Now, similar to the Schedule E that we had in one of our previous videos for foreign taxes paid, this schedule is going to be pretty straightforward, and there's not going to be a lot of information on it, and it's for the same reason, right? This example that we're using, the Fake Offshore Company Limited, a Cayman Islands company. Cayman doesn't impose foreign taxes, and the entity is invested in local stocks and bonds that also don't have any taxes paid, right? So in this example, if we look at our financial statements, you'll note here that net income or loss per books has gross income, there's a foreign personal holding company income, and a variety of expenses here, but none of which are income taxes. So there's no there's no foreign taxes being paid at this company level. And so for that reason, we still have to complete the form and provide it to the shareholder, because they'll still need this information on a gross income basis, but at least when they get a look at this, they'll see that, okay, well, if we scroll down here to the amount of taxes that were actually paid throughout the year, what the foreign taxes are actually creditable for purposes of this income, there's not going to be any, right? But nevertheless, still need to file the form because we're a Cat 4 filer, 5A and 5B, and you also should be giving them as much information as possible about the income coming through the company. So a few things just to highlight here. So questions A and B. So the type of income, passive, general category income. In our case, we have passive portfolio income, so it's foreign personal holding company income is generally going to be passive with respect to these types of income. So dividends, rents, royalties, interest. So we've got passive noted up there. And then the category code. So if you note here, it says if category code is passive, enter the applicable grouping code. So what is this? The CFC Income by CFC Income Groups, you can only group income types generally based on the amount of tax that's assessed on the income. So our code here, 3I's, the 3I code means that all the passive income that was received here during the year it was subject to no withholding tax, right? And there's no other foreign taxes that were applied or going to be treated as one item of income, and so for that reason we use code 3I. There's code I, code 2I's, and then there's a code 4. And if you can look at the Form 5471 instructions, they lay out what the withholding tax criteria is depending on the code type. Okay. Now, question C, asking us, what type of income is this? Is it U.S. or foreign? This is foreign source income, right? So the dividends, the interest payments, these are coming from companies that are based outside the U.S. And so the source of a dividend payment for a foreign corporation is going to be foreign, right? If this was a U.S. domestic corporation and it was paying dividends down to the CFC, then that would be U.S. source dividend income. Now on question D here, it's asking us to complete separate Schedule Q if we have the FORE or FOGEI income. So what are these? So the FOGEI is foreign oil and gas extraction income, right? So if you have that type of income, you need a separate schedule, or FORE is foreign oil related income, right? Now, obviously none of these apply, so we're not doing a separate Schedule Q, and we're not checking this box. All right, so now into the numbers and the columns here. So we have our Subpart F income group here. This is where we're living for our fact pattern, right? The only types of income we have are the dividends, the interests, and the gains from the sale of the stocks. Now, you enter everything on a gross basis, right? So these numbers are very similar, and the expenses here, if any, are very similar to what we saw with the Schedule I video, right? So you recall Schedule I, we had to use Worksheet A to compute the gross income and allocable expenses. So for those of you who have seen that video before, you're familiar with this worksheet and our fact pattern. So we could see, we've got the gross foreign personal holding company income, and then down here where we were, if we had these apply, we were entitled to allocate expenses or record expenses directly related to those income items. It's a similar exercise down here for the form Schedule Q, right? So because we didn't have any definitely related expenses, we don't have any other interests, no other allocable expenses, that's why these columns also continue to be blank. Okay, now page 2 here where the columns carry over, right? So current year tax, none, right? Current year tax on disregarded payments, other taxes, none of it's here. So the adjusted net income column in column 6, so XI here, is going to be the same numbers as the gross amounts. Now, so here in column 7, so XII, you are supposed to enter the amount of foreign taxes that are actually creditable. So you got to go through whatever you've entered here for those expenses and then pick out, well, of these of these taxes that were paid by the foreign corporation or withheld at source, what types of foreign taxes are actually creditable, right? Very important, because not every foreign tax that's applied is creditable for U.S. federal income tax purposes. And then the last column here, average asset value. So this is really only necessary if you have payments made up to the CFC that are disregarded. And so we've entered this information here, but largely will be irrelevant because we don't have any of those. We don't have any current year tax on disregarded payments, right? So we've entered the average asset values, basically what we did, and there's a lot of methods you can use here, just use one that's reasonable. The assets that generated the dividends and then the assets that generated the capital gains, you can take an end of the month number for those gross asset values, basically add them all up and then divide by 12, right? So if you have 12 months out of the year, use the end of the month values, add them all up, divide by 12, and you'll get an average asset value. I've seen the computation done a number of ways. Some people use quarterly amounts. Just use something that's reasonable to actually arrive at something that's appropriate for an average asset value figure. And so that's why we've entered those there. And then that's the end of it. Now, again, this is a fairly simple example. Nothing's too complex here. We will have additional videos covering some more complex scenarios. So as those are added, I'll put the links below. So if you stumble upon this video first and you're looking for something that's a little more involved, we'll have those in the future. So, all right, so that covers it for Schedule Q. Thanks so much for watching, and I'll see you on the next video.